Hello, welcome to this short session today. We're going to talk about, in the financing section of the national portion or the common law, we're going to look at financing concepts to include the different methods. We're going to talk about lien theory and title theory. Very important content that you have to know for the state exam. My name is John Enzing. I'm a certified real estate instructor both in Louisiana and Florida. My specialty is to private tutor you, the student, and prep you for the exam. If you need time, you can go to privateturingsession.com, privateturingsession.com, book an appointment, and let me help you out and get you prepared for the exam. Or you can email me at john.enzing@gmail.com. All right, let's dive on into this. We're looking at financing concepts, and we're going to talk about a few components to the financing. Now, a couple of methods of financing you want to know for the state exam. First one we're going to look at is conventional. Conventional is nothing more than a private fixed rate loan. You can finance it at 80-20, 90-10, 95-5 loan to value ratios. Remember, anything above 80-20, high LTVs require private mortgage insurance, okay, PMI. Now, non-conventional loans, and that's the way you may see it worded on the state exam, non-conventional means government loans, okay? So don't be confused when you see non-conventional, because that just means it's not conventional, right? It's government, okay? So we have two types, FHA and VA. FHA, government insured, and in VA is government guaranteed. VA is designed for our personnel who served in the armed forces. That's a benefit that they get through the VA, okay? So FHA is government insured, okay? Now, the next thing we have is seller financing, another method to finance. Say someone doesn't have any credit or has poor credit and they need to get and want to buy a house. Well, they can actually go to the seller and finance the property. And one of the methods is called a land contract. You may see it as an installment contract on the test, land contract, a contract for deed. Basically, it gives the buyer equitable title. The term equitable title means possession with the future intent of getting legal title. Okay, so you occupy the home for the terms and the agreement of the payment of in the land contract in the financing section of it. Once the loan is paid off or the agreement is paid off, then the title goes from the seller to you, the buyer, is now the new owner, and you get legal title to the property. While you're in it making payments, you have equitable title, okay? So mortgage financing, and then you got seller financing. Now, let's look at some theories that each state has. So, you know, Louisiana and Florida, for example, are both lien theory states, okay? Now, these are principal rules for financing when it comes to lending for home loans. Each state has their own, okay? So Louisiana and Florida are both lien theory. What does it mean? Lien theory means there's a lien on the property. In other words, if you go buy a home, you actually get title to the property. You get legal title. Your name's on the deed. The deed is in your name. You've got legal title. The bank doesn't. They put a lien on your property to protect their money they lent you. So the borrower does not convey title to the lender. At closing, you get a copy of the deed. Although it's recorded in land records, you can get a copy of the deed. You have legal title to the property. That's ownership. The bank doesn't. They file a lien on the property. Now, the borrower does retain title to the property, but allows the lender to put a lien on the property. That term's called hypothecation. Okay, you may see that term on the exam too. Hypothecation is where the borrower or the owner of the house surrenders the fact that they can, without surrendering ownership, allows a lender to put a lien on the property, okay, in the amount of the money that was borrowed, okay? Now, if the house is not being paid and the debt service is not being paid, then the lender is going to file a foreclosure, okay? And so that means that in the process of getting a court order, they're getting the property back to them, okay? Because they don't have ownership of the property. Remember, the property owner is the buyer, okay? And the lender files a lien in land records on the property. That term hypothecation basically says that the borrower is allowing the lender to put a lien on the property without the borrower surrendering the legal title of the property, okay? So basically the lender files a lien on the property to secure the debt. And if the debt's not paid, the lender has to go to a court, that's in the foreclosure section, has to go to a court and file an adjudication to get the property possession back and be able to auction it off. And again, that's a judgment to foreclose upon the property. Okay, so that's lien theory. Remember, the borrower, the mortgagor is the one that owns the property. Okay, the mortgagee files a lien called hypothecation. Now, title theory and deed of trust are the opposite. Okay, this is where the lender or the bank does have legal title to the property. Okay, there is no lien. Okay, so the borrower will convey the title, the deed, to the lender at the act of sale. Okay, and basically it's held by the lender until the loan is repaid in full. And then the buyer or the borrower during that time has equitable title, just like a land contract, has equitable title, okay? And then that's possession of the property with future intent of getting legal title, okay? So the lender takes title, they don't have to go to court because they have the property, it's in their name, okay? So it just gives the right of the borrower to live in the property with equitable title, or what they call possession only with the intent of owning it in the future, okay? Now, there's a term you want to know called Defeases Clause. I like to look at it this way, very simple. The loan has been defeated, okay? And that's usually evident through a satisfaction of mortgage. So when the loan is defeated and the property is reconveyed to the borrower, the homeowner, and now gets legal title, remember, equitable title is what they have, the Defeases Clause will convey the title to the owner of the property and give them full legal title when the loan is paid in full. That's called the Defeases Clause. That's in the promissory note, okay? Hey, listen, I hope you enjoyed this short session on financing concept. We talked about 3 different methods: conventional, we talked to government loans that include FHA and VA, and we talked about land contracts, which is a form of seller financing. And then lien theory. Remember, the owner of the property, the borrower owns the property. They have legal title, and the lender puts a lien on the property filed in land records called hypothecation. That's allowed by the borrower without giving up legal right to the property or legal title to the property. And then title theory is the opposite. That's where the bank or the lender has title to their property. The borrower has equitable title or possession with the intent of owning it in the future. Remember, the Defeases Clause, when the loan is defeated, that title deed is now reconveyed to the owner of the house and they take full legal title to the property, okay? Hey, if you need additional help in the financing section, real estate math, whatever you may need, Louisiana portion, civil code, privateturingsession.com, book an appointment. Good luck on your exam. Bye for now.